Imagine turning your first $1,000 into $10,000 or even $100,000. Sounds impossible, right? Well, not if you follow the advice of Dave Ramsey.
You either tell your money what to do or you wonder where it went.
But how can you follow his advice when you're just starting out with your first $1,000? Fret not. In this video, we'll show you how to invest your money wisely and avoid losing it all. According to Warren Buffett, if you're just starting out as an investor, consider putting your initial $1,000 into exchange-traded funds. They're an easy way to access different investments all at once.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942. I spent $114.75. Three shares, $114.75. If I put that $114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today. Oh man, $400,000 today, one person's lifetime. Now the market's gone down many times during that time. People have panicked during that time. Headlines have been terrible. But if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold.
ETFs help you manage risks by diversifying your investments. That means your money gets spread out over lots of different things, so if one thing fails, you're not left high and dry. And ETFs also give you a lot of flexibility. You can trade them whenever you want, just like stocks and bonds. What's cool about ETFs is that they're pretty affordable. Some of them charge really low fees or even zero fees, which can save you some bucks. With $1,000 in your pocket, you can own a piece of Amazon, which, by the way, is trading for over $3,000 per share. No matter if you have $100 or $5,000, fractional share investing works for any budget.
You can buy a slice of pizza. Why not trade a fraction of a stock? Investing in companies using fractional shares on interactive brokers is as easy as pie.
So instead of buying a whole share, you can buy just a slice of a stock. All you gotta do is find a brokerage firm that offers fractional shares, and you're good to go. Plenty of online brokers let you trade fractional shares in real time without any commission fees. And you can even divide your $1,000 into tiny portions and spread it across lots of different companies. This strategy is fantastic for diversifying your portfolio across various businesses, no matter how much you've got to invest. With $1,000 in your wallet, you can put it into a Roth IRA, individual retirement account, that comes with some tax advantages. Basically, you contribute money that's already been taxed, and then it grows tax-free. And when you retire and start taking out the cash, you won't owe any income taxes on it.
There's a Roth IRA and there's a traditional IRA. Please know the Roth IRA is the best IRA, period, end of story. Your money grows tax-free and you withdraw it tax-free. A 401k, yes, you're not being taxed on the money today, and yes, you're not paying taxes as the money grows, but you will pay taxes when you withdraw it. A Roth IRA, the benefit of a Roth is that it is growing tax-free and you won't pay taxes when you withdraw that money.
For 2023, the most you can contribute to an IRA is $6,500. If you're 50 or older, you get a little bonus and can contribute up to $7,500. Now, keep in mind that there are income limits to be eligible for the full contributions. Only those earning over $153,000 if single or $228,000 if married have their contributions phased out. Once you've got your emergency fund all snug and secure, taken care of your retirement contributions, and paid that high-interest debt, consider diving into certificates of deposit or CDs. Think of CDs as a financial deal where you get a fixed interest rate for a specified period, usually between 3 months and 5 years. The longer you commit, the juicier the annual percentage yields become.
So what are some of the reasons for investing in CDs? The obvious reason is to diversify your portfolio to help weather out the storm from market declines. Another reason may be that with the interest rates being sky high, you may not be able to afford buying a home right now. In that case, a CD is a solid investment tool to safeguard your down payment for a new house where you know you may be waiting 1 to 2 years before you'll be in the market to buy. And at that case, that's when you're going to need the cash. Another situation may be that you are in retirement or you're close to it. You may want a larger portion of your investments shifted to a more reliable return to safeguard your nest egg for the next 10 to 20 years. Whatever your reason, the intent of a CD is to have a conservative investment option where you have a guaranteed, reliable return on your investment.
So before opening a CD, take a moment to think about your financial goals and how badly you need to access your funds. If you're aiming for stability and some additional returns for your financial portfolio, opening a CD might just be the cherry on top. If you want a set-it-and-forget-it approach to managing your investments, then robo-advisors might just be your new best friend. These online services are like your own personal financial genie, making financial planning and portfolio management super easy for everyone. Now, there are tons of robo-advisors out there to choose from, and most of them only require an initial deposit, sometimes even as low as $1,000.
A lot of people are turning towards artificial intelligence and robo-advisors to get their financial advice. I see a lot of financial advisors putting it into their practices. I was just wondering, is it a dangerous thing? Is it a good thing?
It's both. AI and robo-investing is good. There's nothing wrong with any of it, especially where you're dealing with a very small account and you're just getting started, and it causes you at a low cost to get started as an investor. But if I was managing $1 million, am I letting a chatbot do that? Nope. Yeah. Don't think so. Really. I mean, AI stuff's very impressive. I was looking at it in a meeting this morning, some of the stuff that we're going to be able to do with it. It's ridiculous.
Yeah.
How cool some of this stuff is. But with it comes the danger of no human oversight. You are always in charge of your money, not your financial advisor. Whether it's AI, whether it's robo, whether it's an individual human being, you have to understand where the money's going. You are in charge of it.
All you gotta do is answer a few questions, and the robo-advisor will construct a portfolio of funds or exchange-traded funds tailor-made to fit your long-term goals. And the cost of using a robo-advisor won't break the bank, with management fees usually clocking in at less than 0.3% annually. You're looking at a measly $3 for every $10,000 you invest in a year. Plus, these services can even help you set up a strategy for recurring deposits and investments, making your journey to financial success a breeze. With just $500, you can dip your toes into real estate using a platform called Fundrise. Fundrise offers a starter portfolio that spreads your $1,000 investment across different real estate investment trusts, giving you instant diversification.
They're the businesses that you buy once, and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation. That's one reason real estate in general is good during inflation. If you built your own house 55 years ago like Charlie did, or bought one 55 years ago like I did, it's a one-time outlay. Whereas if you get an inflationary expansion in replacement capital without having to replace yourself.
No need to worry about all the nitty-gritty of property management and being a landlord. Fundrise takes care of all that jazz for you. And in 2021, investors on Fundrise enjoyed an average return of 22.99%. Sure, the numbers dipped to 3.49% in 2022 so far, but you know how things go. So if you're looking for a simple way to invest in real estate without dealing with all the headaches of being a property owner, Fundrise is definitely worth considering. Just open an account, invest your hard-earned dollars wisely, and let Fundrise take care of the rest. And that concludes our investment guide. If you found this information helpful, please consider liking and subscribing. Until next time, happy investing and take care.